Hey, what's up you guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video I'm going to show you the trade that happened on GBPUSD. First of all, today was NFP day, so I didn't trade. I had a good week on my FDMO challenge, and if you want to see the results, check out the last video, the one before this one. And then, but today, I was analyzing the market and I saw a really clean setup that happened on GBPUSD. It was clean, you know, and it could be a one-to-one, even more than one-to-one risk to reward ratio trade, which was absolutely crazy. And I decided to record this quick video for you and show you exactly what happened. So without any further ado, let's get into the chart. So all of them, almost all of them, were consolidating this morning, guys, because of the news, the fundamentals, and the fluctuation in the market. And I was analyzing GBPUSD, EURUSD, Gold, NAS 100, and the best one that I could find was this one right here. And what happened was it is actually 7:50 in the morning Eastern Standard Time, which in my time is actually 6 in the morning. So when I was analyzing the market, I noticed that we have this support level here, which is the lowest point. We have this support level here, and we have this support level here, and also this one support right here. So it means that we have a bunch of liquidity below each one of them, because there are so many buyers who took their position and put their stop loss below these levels, here, 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 here. And at the same time, we have similar thing right here with a bunch of liquidity above the level. So right now we have a high probability demand zone from here to here. Why? Because this is the last bearish candle, and after that we had a huge spike towards upside, and the next candle after that never tapped our zone. So that's why there's a gap between this candle and this zone right here. So this gap makes this block a high probability order block. So I was just waiting for the candle to literally tap to my level, to this area right here, and it actually did. And when I saw this huge momentum, as I said, I was just watching it. I didn't trade it, but if I wanted to trade it, I would put my buy stop above the previous candle and my stop loss very tight to it, and my TP somewhere around here, 1-to-1. And then after that, as you can see, this is exactly what happened with one candle. Literally one candle after that, we had a huge move towards upside. And if I wanted to hold this trade, it would have been almost 1-to-2 risk to reward ratio trade. So you got to see what the purpose of the market is. So let's say that you take this trade, you get out of the market 1-to-1, beautiful, it's actually done. So what might happen after that is really interesting, because we literally have another high probability demand zone from here to here, just because of this huge spike towards upside that we recently had, and then the price came down and we are just waiting for the price to literally tap. As you can see, it made it invalid, it came down, stop out every buyers right here, this one became invalid, and at the same time it created another high probability order block, which is from here to here. See this one, if I zoom in, you'll see that this candle never tapped into this zone. It's a tiny gap, it's a tiny gap, but it still counts, and you can literally take it if it bounced back and wants to tap your zone again. So see, we had a drop, multiple breakout structures, like a couple of breakout structures, 1, 2, and then it's doing a little bit of correction, and then again it's coming towards downside. Why? Because of this tiny gap that the market left when it was dropping. So in this case, you can literally do the same thing. You can put your sell stop here, you can put your stop loss here, and your TP somewhere around here. But one thing that you need to pay attention to is that when you have such a wide high probability supply or demand zone, the best thing you can do, because you don't want to put your stop loss here, right? It's too wide, I know that, but based on my experience, the best thing you can do, instead of putting it exactly above the candle to be super tight, it's way better to put it like in the middle, somewhere in the middle, here or here, to just give it more room to breathe. So let's say that I have my sell stop here, and now my TP is going to be exactly right here. If it actually wants to tap, let's say up to here, and then it comes down, it goes up again, it goes up, see, it's kind of close to my stop loss, and then it literally came down, it stopped out every single buyer here, and now it's literally going up. So even this one counts. This one is the next one, but we don't know when it's going to reach this level. So our purpose, our goal for each trade should be exiting them to the closest support or resistance level. So for example, when you take a sell position here, where you should close it is very, very important. It should be either the next high probability demand zone or the next support level, which in this case, since we didn't have any high probability demand zone, I closed it right here because this is the nearest support level that we had. And it literally came down to stop out every buyer, and now it's probably going up to, you know, stop out every sellers that actually took their position here, and this is exactly what it did. So that's what I'm saying. Give it some room, put it above this previous candle or even right here, and you got to pay attention to your TP because it's very, very important. You just don't want to randomly close a trade or have a fixed one-to-one, but you don't pay attention to the next high probability supply or demand zone, and you just get lost and also stopped out. So that's what I'm saying. This is the best bet that you can have. One-to-one trade, beautiful one, and as you can see, it's constantly creating high probability supply and demand zones, and one of them is right here. So the next candle never tapped, another high probability supply zone, it invalidated, done. We are not going to trade it anymore. And another one is right here, which is a big one because the last two came down, boom boom, see, a few touches, and then after that it's probably going up again, but this is too wide. I personally won't trade it at all. I won't trade such setups. But this is another high probability supply zone here, and this is another push towards downside by sellers. So again, you probably can't do such a thing. Take your trade here, your TP right here. I haven't tested that, so I don't know what's going to happen. So in this case, you get a stopped out, but if you put it below, above the zone, probably the same thing happens. No, see, if I put it above the zone, I wouldn't have got a stopped out. But since it was in the middle, then I easily got a stopped out. So what you can actually take away from this video is that when you have a wide zone, put it somewhere in the middle. If you have a tighter zone, so what I mean by tighter zone is that probably 10 to 12 pips, then you can easily move your stop loss above that, because 10 pip stop loss is not bad at all. I know that you want to take a sniper entry, but instead of putting it here, just put it here. You're safer, you're more protected. But when you have no other choices and your zone is big, but you have a good momentum at the same time, but you don't want to put it above the candle, just put it in the middle, somewhere in the middle that can give you a clean one-to-one risk reward ratio, considering your TP as well, if it's looking good, if it's not so close to the next support or high probability supply and demand zone, you know what I mean? So in this case, if I wanted to hold my trade, it could actually be a beautiful one-to-one trade, and I had to just hold it a little bit more to give me a one-to-one trade. And it just kept coming down. So that's it, guys, for GBPUSD. There were so many lessons in this video, guys, but if you like this video, give me a thumbs up, subscribe to my channel, and turn on the notification bell so next time when I upload a video, you'll get notified. And before you go, let me show you the results of Gold EA Incubator on our $1,000 account since March 7th all the way to May 6th, which is almost 2 months, and we've been able to gain over 115% profit on a $1,000 account. And today we had a $200 withdrawal as well that is going to pop up here soon. So our $2,000 account looks like this: 7.47% since April 25th, which is $150, absolutely crazy. And this one right here on a $5,000 account is actually $61, which is really, really cool for this account. But this is not updated because we've gained more than that. It's not recently updated. It's actually $5,100 or something. So if you want to trade completely hands-free and you don't want to get involved in the market, you don't want to analyze the market yourself, you don't want to do the entries yourself or wake up in the morning, Gold Incubator might be the best bet for you because it trades completely hands-free, 100% on autopilot. I just need to turn it on. It trades during London session and close all the trades in profit the next day. So if you want to grab your license, guys, grab your license from smartyincubator.com. The link is going to be down below in the description. And then after that, install it on your account, send us your account number, and we'll manually activate your account, and you can enjoy profits on autopilot. So thanks for watching this video, and see you next week.